pleasure to be here. And what a treat for me just to be 10 minutes walk from our office. It was the easiest event ever to get to, so that was a nice way to start off my evening. And I was going to start off my talk today by sharing some perhaps familiar faces with you. So we have here Lady Gaga. We have the winning French football team at the 2018 World Cup, and we have Theresa May. Now, why have I shared these people with you, and what on earth do they have in common? Well, it's really just that 2018 was a big year for them. Lady Gaga was topping the pop charts in the UK. The French football team were victorious at the World Cup, and Theresa May was Prime Minister. So, but what's my point? My point is, to me, none of these events seem particularly long ago. But looking forward over the next 6 years to 2030, that seems quite a time in the future. And it also feels very unpredictable, because I can't tell you who will be topping the UK charts in 2030. I can't tell you who will be winning the Football World Cup, which I think is due to be held across Spain, Portugal and Morocco. And I certainly can't tell you who's going to be UK Prime Minister. You know, that's anybody's guess. I mean, the world is unpredictable. And looking forward, it is perhaps that uncertainty is the only certainty that there is. And certainly we're surrounded by really complex challenges. I don't know about you, but sometimes when I'm listening to or reading the news, I can sometimes feel completely overwhelmed by all the issues that we're facing. Whether that's the geopolitical tensions we were talking about earlier, macroeconomic pressures of rising interest rates and inflation, cost of living crisis, it can all feel rather depressing. But the good news is, I do believe we can do something about it. And I also believe that doing something about it presents investment opportunity. Now, let's dive a bit deeper, because I've talked about what we don't know. But what do we know with a bit more certainty? Well, a number of trends that we know with more certainty are encapsulated in this diagram, which is one of my favourites. I'll just explain it briefly. This diagram here shows the world population from 1950 out to the predicted world population in 2100. The dark blue triangle is the population in 1950, and then as it goes out, it starts to go through the decades. Up this axis, it's the age of the population, and across the bottom, it's the size of the population. So what is this telling us? So as you can see, in 1950, there were actually lots of young people in the world. I think you actually mentioned in your presentation that kind of population triangle. So there's lots of young people in the world, and then it tapers up, and relatively few older people. But as we go through the decades, two things happen. One is that the number of people increases dramatically, but also the age profile of people changes very markedly. And what does this mean for us when we think about investable trends that we can think about with a high degree of certainty? Well, one, as I said, the global population has risen dramatically. When I was born, which I'd like to say was not that long ago, the global population was about 4 billion. We're now looking at over 8 billion today. In terms of the median average age of the population, from 1950 to now, it has doubled. Now, those two things have big implications for areas such as healthcare demands. People are living longer, we can see that by the chart, but they're not necessarily healthier. We mentioned earlier tonight that India is now the world's most populous country, and it is also a country that's seeing a very steep rise in non-communicable diseases, sadly, such as cancer and diabetes and heart disease as their population ages. It may seem very obvious, but we need to produce enough food to feed the world's growing population. There are now 8 billion people who need access to affordable and nutritious food. But we need to produce the food in a way that doesn't exacerbate our impact on the environment. Otherwise, we'll exacerbate the climate crisis. Little did Lady Gaga know when she was topping the charts, or Theresa May that was Prime Minister, that the subsequent 6 years would be the hottest years on record. And of course, that has an implication for other challenges, such as our use of water. It's estimated that by next year, 2/3 of the world's population, that's a huge number, will be living in an area affected by some degree of water scarcity. And this is all exacerbated by a frightening level of biodiversity loss. But as investors, because that's what we're here to talk about tonight, how do we think about these challenges that we're seeing with a really high degree of certainty? Now, one kind of way of thinking about your investment portfolio would be to exclude things that cause harm. And you see that, you deciding not to invest in a particular industry, sector, or company. Now, that can help align your portfolio with your values, but in terms of really investing in change and opportunity, it has its limitations. I don't know what you would exclude from your portfolio in order to have exposure to innovative healthcare, for example. Or I don't know what you would not invest in if you're wanting to support education in the world. So instead, what we think of within Keystone Positive Change is to look at investing in companies whose products are really helping to address these challenges. And why do we do that? It's because in this, we really share a philosophy with Impacts. It's thinking that companies who are really helping us to solve these huge challenges, and you could also think of these huge challenges as possibly the biggest structural growth drivers that we're going to see over the coming decades. Companies that are really solving these challenges through their products and services should see rising demand for their products. They should benefit from motivated employees and benefit from loyal customers. This is really how we take that philosophy and translate it into a portfolio. At Keystone, we have two equally important objectives. So we're seeking to generate attractive investment returns, which we define as 2% per annum ahead of the MSCI ACWI net of fees, and also to contribute towards a more sustainable and inclusive world. Every company that we invest in has to meet both objectives. We run a very concentrated portfolio, so the stock range is 30 to 60. At the moment, there are about 35 companies in the portfolio in both the public and private markets. And we're very long term. When we're thinking about these big challenges, climate change isn't going to be solved over the next quarter or the next 12 months. We have to have a multi-year time horizon. So we're very long term. We invest in our companies for 5 to 10 years or longer, so turnover is low. And when we're thinking about these big challenges, we're looking for companies whose products are helping address challenges in one of these 4 impact themes. So it's social inclusion and education, environment and resource needs, healthcare and quality of life, and base of the pyramid. Now, I'm often asked what base of the pyramid is, but it's looking for companies who are helping those at the very bottom of the global income ladder. there are around 4 billion people in the world who are on less than $3,000 a year income. So it's looking for companies that can help them. I'm somebody who always likes talking with examples, though, so why don't I share some of the companies in the portfolio. This company probably doesn't need very much introduction to you at all. John Deere, if you're driving at all through the Scottish countryside over the coming weeks, you'll no doubt see lots of their equipment out in fields. But why do they merit a place in this portfolio? It's really down to that challenge I talked about feeding the world's population. And we particularly like John Deere because they're leaders in precision agriculture. So that technology where you can attach cameras and sensors to the front of agricultural machinery to allow you to be very precise in how you apply chemicals. Now, this reduces chemical usage on fields by about 80% and increases yields. So you can see why it's attractive to farmers, because it's reducing their input costs and increasing yields. But interestingly, from that investment return perspective, from that financial perspective, it's also a higher margin area for Deere, because it takes the economics for them from being merely manufacturers of machines to providers of software. And again, that's just a really nice link for us, and it's what we're looking for in companies who are solving challenges profitably. Completely different theme, healthcare and quality of life. We invest in a company called Dexcom. You may be familiar with them. They produce continuous glucose monitoring systems for diabetics. They were the first company to do so, which allows anybody suffering from diabetes to get continuous readings of their glucose levels sent to their mobile phones. It's much more obviously convenient than finger prick testing, and the efficacy is greater as well. We've owned Dexcom in our positive change portfolio for about 7 years, and it's done exceptionally well. It's become a profitable business. It's expanded its patient population, and it keeps iterating different levels of its monitors. It's now on the 7th iteration of its monitor. They're becoming ever faster and ever cheaper. And then finally, base of the pyramid. What are we finding here that's of interest? This is actually a US-based company called Remitly. I don't know if anybody's heard of it. It's effectively a mobile money transfer company. So it allows people to send money to other countries. Their key target market are people who are sending remittances back to their home countries. So for example, people who've moved from an emerging market to the US, Canada, Europe, and are remitting money back to their home market. A huge amount of money is remitted every year. It's around about $800 billion is remitted back. That money can be transformational for the recipients. Not only can it be used for essentials like housing and food, but it's estimated that around about 25% of remittances are used for education costs. Again, that's really exciting because you can see remittances being that mechanism for driving positive social change in the future. At the moment, Remitly is a relatively new company. It's got about 2% of the global remittance market. There is a lot of potential growth there. It is cheaper than companies such as Western Union. It's more transparent. People can track the progress of their money more clearly. And it has been enjoying extremely high retention rates. Over 90% of their users keep using them again and again. So 3 entirely different companies in completely different sectors, but the one thing that they all have in common is that they are really clearly targeting a challenge and doing so in a way that we believe will generate attractive investment returns over the long run. that's talking a bit about kind of what we do in the companies we invest in, but I guess the question is, does it work? And of course, we want to look at that through two lenses, one through that investment lens and one through the impact lens. Have the companies had a positive impact? Looking at it through the investment lens, this chart on the left is our experience. This is our positive change fund that we've been running since the start of January 17. Oh, that's really disappointing because the MSCI AC Index is in white. Anyway, it's below our fund. It's not showing up on this slide. And then the performance to the right is the industry experience, which is a composite of 19 impact funds. It's a piece of research done by Pensions for Purpose. Hopefully in the slides that are shared after this event, you'll be able to actually see the full chart. One thing that I would caution is that performance over the last few years has been really difficult due to many of the factors that previous speakers have mentioned. And I would never advise investing in Keystone if you're looking for an investment that's going to closely track the benchmark. This is going to be an investment approach that we strongly believe will deliver really attractive returns over the long run. But over short periods of time, it's going to be volatile and it's going to be very different from market returns. Oh, there we go. They've magically appeared. Thank you. I feel that's like a big reveal. Then thinking about the impact side, how on earth do we think about and report on that? And I chose this image because I think in the financial world, we love to overcomplicate things. We love kind of very complicated statistics. We love an acronym. But how do we think about reporting on impact, which in many cases is subjective as well as objective? In terms of a company like Remitly, which I mentioned, which is remitting money, you can see how much money has been remitted. You can see how many users of remittance services have been supported. But in terms of the real and meaningful impact to their daily lives, that's kind of immeasurable, but at the same time, it's really important. But we think it's very important to report on the impact. We produce an annual impact report. I've got one here. Within it, what we do is we report on the impact for every single company within the portfolio. And we do so using a logic model based on the theory of change. I've got a really simplified version here, just for the purposes of presenting, for Dexcom, which is the company I was mentioning earlier in the healthcare sector. For each company, we look at the inputs in terms of financial and human capital. We look at the activities in terms of what they do, how much of that activity they do. So you'll see for Dexcom that they helped 2.3 million people last year manage their diabetes more effectively. And what does that actually mean in terms of systemic impact? Well, it lowers the risks of complications by up to 50% for those individuals. And then we map that to the UN SDGs using the underlying targets of the goals. You'll see in the pink circles there, that just gives a kind of impression of how we've seen that impact of Dexcom increase over time. And of course, importantly, as Dexcom have expanded their patient population, they've grown their revenues and grown their earnings. So we want to see that from these companies with that impact and investment going hand in hand. I just wanted to share this, like, what do we mean by mapping to the SDGs? You'll see them a lot. What we do is there's 17 sustainable development goals. There are 169 underlying targets of the goals. So for something like Dexcom, it relates to target 3.4, which is by 2030 to reduce premature mortality from non-communicable diseases. We also, where we can, it's probably difficult to read, aggregate up all the impact into a single graphic, which shows that across the portfolio, how many patients have been treated, how many tons of waste have been avoided, how many litres of water have been saved. And looking to the future, I don't think I can really stress how excited the team are in terms of the different ideas that we're looking at, whether it's in areas such as feeding the world's population or thinking about the electrification of our transport systems, or thinking about the ways that AI are already being used to help address some of these critical challenges. I think ultimately we have to be optimistic that these challenges are solvable. We have to be optimistic that you can make good investment returns over the long term by investing in companies who are trying to meet them. And I would really welcome any questions at all that you have on the topic, because ultimately, I think we're extremely excited of the change that we will hopefully see over the next 5 to 10 years and beyond.
Thank you, Rosie. So yes, questions, gentlemen, just here.
Just hold him up for an update. Sure. Thank you for your talk. I've watched Key Positive for quite a long time now, and I guess I've had lots of experience of working and living in Africa, for example. And the one thing I would say is that sometimes we need a reality check. Poverty has got much worse in Africa. Yep. Much, much worse. People are starving on a regular basis. And I've certainly, over the last 5 years, I've seen drastic changes. And the one thing that the current ESG doesn't in any way address is subsistence farming. Mm-hmm. And is growing all the time. And that's the one thing that destroys the environment. Yeah? Yeah. And I would be interested to know what Keystone are doing about that issue, because it's a really vital issue for not just Africa, but subsistence farmers worldwide.
Yeah, and there's a few different ways we're thinking about that within the portfolio. So I'll just give you a few examples. In terms of the huge inequalities and huge poverty that we're seeing in Africa, couldn't agree with you more. In terms of investing in those companies, we've got one company at the moment that's based in Kenya, Safaricom. You've maybe come across it over your travels. For those who don't know it, it's a provider of mobile telecommunications, but the reason that we really like it and invest in it within Positive Change is that it provides mobile banking services, and it's on SMS technology, so you don't need a smartphone.
That happens everywhere now.
Yeah.
It's absolutely essential. Yeah.
And it's not an easy jurisdiction for these companies to operate in at all. So Safaricom have been very successful in Kenya, and they have now moved to Ethiopia, and we're watching that with interest. In terms of helping those within Africa in terms of farming, interestingly, Deere, who I mentioned, have recently announced a joint venture in Nigeria, which will be, I can't pretend it's anything other than a very small part of Deere's operations just now, but that's what we want to see from companies in the portfolio, is actually that intent to make a difference in difficult geographies. And then perhaps the most kind of esoteric example is there's a real problem in terms of small-scale farming, in terms of farming cashmere goats. It has led, I hadn't actually appreciated this till we're doing some research on the area. Cashmere farming, and it's often done just on a very small scale as well, people with a small handful of animals. But it's incredibly damaging to the local environment, because the way that the goats graze, they actually pull up the grass at the roots, and it doesn't regrow and leads to desertification. So then you're thinking, actually, well, what could the alternatives to that be? We invest in Spiber, which is a synthetic biology company that is able to make cashmere equivalent fibres but out of sugar stock. So it's a way of trying to think of alternatives. It doesn't really address that root problem, but I think as soon as you start to look at these issues, it's complicated, but you're thinking of these solutions.
That, but one of the real questions is, how many people do you have in the field looking for local solutions and actually trying to invest in local companies which are trying to solve these kind of issues? It has to be in the field, as far as from my experience at least.
Yes, and so our investment team is all based in Edinburgh, but what we do, because we need local insight, is that we will hire local consultancies to investigate issues on our behalf. So, for example, we've recently invested in a Southeast Asian company called Grab, which provides a super app, and we were really wanting to try and understand actually what difference is this app making to people's lives on the ground. We can't do that from Edinburgh. So we hired a consultancy called 60 Decibels. They did 1,600 interviews of small merchants in the Philippines and Indonesia to really kind of find out at that grassroots level, what difference is this making to your ability to run a successful small business. So they were all micro and solo entrepreneurs. But I completely agree. Otherwise, it's an impossible thing to research from your desk. And of course, we go out and visit ourselves. But yeah.
Great, thanks, Rosie. Any other questions in the room? One lady just at the back here.
Hello. In terms of background, what are the assets under management? When was Keystone actually set up, and what have been the results it's delivered? And obviously, we're talking about investment and impact, and the two don't necessarily go together. So I'd be just interested to know, and indeed, what industry classifications you've got within the portfolio, because obviously you're choosing them because they've got an impact, or they wouldn't be there. But similarly, how does that reflect across the piece in terms of investment in which country?
Yeah. So a few questions there. In terms of assets in positive change overall, we've got about $7 billion in the strategy. Within Keystone Positive Change, which is the closed-end investment trust that I'm here to talk about today, it's got a market cap of about 130 million sterling. In terms of the industry classifications, they will just be an outcome of where we found ideas that we like within our 4 themes. I would say that since we've been running Positive Change, we've had a natural overweight to areas such as healthcare, and we've also been overweight emerging markets, so around about 30% of the portfolio is currently in emerging markets. But that could easily change over time because, as I said, it really just is an outcome of where we found companies that we like. So we've been running the Positive Change strategy overall since 2017. We took on the mandate for Keystone Positive Change in February 2021. So we've been running it for 3 years. And as I mentioned, performance has been really difficult over the last 3 years. I do have a slide here. So yes, you can see that since our takeover, NAV has declined by 21%, which is obviously not what we would hope at all to achieve over the long run. And it's certainly very different to the performance that we've been able to generate on a 7-year view. The annual discrete performance that you will see to the right-hand side also includes the performance from the previous manager. It was actually a UK income fund prior to us taking it on. And then in terms of, you can see there just some of the companies that have contributed and detracted from performance. So yeah, it's come off quite a bit since inception, but thankfully past performance, hopefully in this case, is not a guide to the future. That's the full portfolio there.
Oh, great. Thanks, Rosie. Any more questions? Final question? In which case, thank you very much, Rosie. Thanks very much. Cheers.
you.